These bars that you see here, rising and falling, shows us one of the most important on-chain metrics for Ethereum, whale accumulation. And this spike right here corresponds to over 820,000 coins that were just bought by the whales. This is a small number of big investors who have accumulated 0.7% of Ethereum's total supply in just the past 2 weeks. It might not sound like a lot at first, but this is the largest inflow we've seen since 2018. When you see this level of demand from strategic investors, there's usually a fundamental reason why they are buying Ethereum right now. We're seeing this happen at a time when Ethereum has significantly underperformed. Since the beginning of this bull market, Ethereum has risen by about 150%. But unlike Bitcoin that has already broken to new highs, Ethereum is still down about 50% from its 2021 highs. Despite this underperformance, something has just happened that could be about to change everything for Ethereum. And we've already seen some shifts take place on Ethereum's price action. Since Ethereum's recent lows in April 2025, we've seen it rise by 110%. Back then, the media headlines were calling for Ethereum to be dead, and there was a record number of short positions, as traders were betting on a lot more downside. But instead of breaking lower, Ethereum saw a textbook short squeeze. This is a scenario we had highlighted in our last Ethereum video, titled, "Ethereum is about to see a massive short squeeze." We stayed exposed to Ethereum with our members at Bravo's research during this entire short squeeze rally. Now, the recent short squeeze could just be a temporary, one-off occurrence if not supported by fundamental driving factors. But what we're seeing now suggests that the demand behind Ethereum's recent rally isn't just speculative. It's backed by real capital, and not just from Ethereum whales, but also from institutional investors. This chart shows the weekly inflows into spot Ethereum ETFs. We've now seen 7 consecutive weeks of inflows, totaling over $1.5 billion. To us, this kind of consistent buying from institutions points to growing confidence in Ethereum's long-term outlook, and suggests that the recent rally may have deeper capital support than many realize, with some real underlying fundamental factors driving this inflow of capital. Now, it's important to recognize that Ethereum's price trajectory is still heavily influenced by Bitcoin. That's because Bitcoin remains the primary leader of the crypto market. And historically, most altcoins, including Ethereum, tend to follow its direction. We can see this relationship by looking at the price of Ethereum and putting Bitcoin's price on top. While not perfect, their directional alignment has had a relatively close relationship. This means Ethereum generally tends to move up when Bitcoin rallies and move down when Bitcoin declines. So, for Ethereum to continue rising, it's important for Bitcoin to continue rising too. And as we've outlined in our recent crypto videos, we continue to believe that the upside potential for Bitcoin still outweighs the downside risks right now. But there is one major catalyst that is telling us Ethereum could be about to stage a major catch-up rally over the coming months, and it has to do with stablecoins. You see, just recently, the US passed something called the Genius Act. This is one of the first major legislative steps towards regulating and legitimizing the stablecoin industry. It sets clear rules for how US dollar-backed stablecoins like USDC can operate, opening the door for more regulated institutional usage and likely accelerating stablecoin adoption. One of the biggest beneficiaries of this development has been Circle, the issuer of USDC, whose stock has rallied over 200% since going public in early June. And while that rally reflects growing investor confidence in stablecoins, there is a big fundamental impact that the Genius Act could have on Ethereum. This chart shows us the total stablecoin supply for different blockchains. This, right here, is Ethereum's share, making up nearly 50% of all stablecoin supply. That makes Ethereum the largest primary infrastructure layer for the stablecoin economy. As stablecoins continue to expand, the networks that power them stand to benefit significantly. This chart shows the share of stablecoin transactions seen on different crypto networks. Today, Ethereum makes up about 60%. So, more than half of all stablecoin transactions are now happening on the Ethereum network. For comparison, the second highest blockchain is the Tron network that currently has a share of about 15%, so 4 times less than that of Ethereum. As the stablecoin market size grows due to increased adoption, it would likely translate into more Ethereum usage and fees generated for the network. That's because it takes the Ethereum coin to pay gas fees for moving Ethereum-based stablecoins. As fees rise, Ethereum's supply mechanically shrinks, since a portion of the fees is permanently burned. That makes rising usage not just profitable for the network, but also bullish for Ethereum's price over time. And signs of growing Ethereum activity are already beginning to show up on-chain. In just the past few weeks, there's been a noticeable spike in the number of Ethereum transactions. This is one of the clearest signs that usage is picking up, which is fundamentally important for any asset to grow. This surge began last month, right around the same time the Genius Act was passed, suggesting that regulatory clarity could already be unlocking new demand. Now, to be clear, transaction levels are still below the highs we saw back in 2021, but the overall trend has been gradually rising, and that momentum seems to be accelerating now. The last two times we saw a sustained rise in Ethereum transactions were from 2016 to 2017, and again from 2020 to 2021 cycle. If we look at what Ethereum did, both times it saw strong rallies during this period, and went on to hit new all-time highs. That historical pattern, of course, doesn't guarantee a repeat, but it does show how rising on-chain activity has often been the foundation for major Ethereum bull runs. And if usage continues to grow quickly, then we think that new all-time highs for Ethereum is a real possibility. And it seems like we're not the only ones to notice this opportunity. The total supply of Ethereum that is held by Ethereum whales has now climbed to the highest level since 2021. This accumulation actually began in mid-2024, right around this point here. Since then, we've seen a steady increase, signaling that whales have been adding to their positions. The last time we saw similar behavior from Ethereum whales was back here in 2017, and that preceded one of the biggest rallies on Ethereum. Of course, no two bull markets are the same, but when you see strategic accumulation of this magnitude, especially from long-term players, it often reflects high conviction positioning for what's likely to come next. We're closely watching Ethereum today for an attractive risk-reward entry point. And just like with all of our trades, we have a clear risk management framework for the crypto market. Our approach has delivered some exceptional returns in the past year, like 30% on Bitcoin, 63% on Solana, and even 83% on Ethereum. And more importantly, we've kept most of our losses to under 5%. If you want to follow our strategy step by step with real-time buy alerts, sell signals, and portfolio updates, then make sure to subscribe to our service.